Hi there, welcome to Kneppy Invest and welcome to a wet Saturday, 2nd of August 2025. Wet where I am anyway. Some of you might be having or experiencing an absolutely beautiful day. 9:37 a.m. So I am on the mid-north coast of New South Wales. This is the Newcastle radar and it's absolutely teeming down right now. And even though it's teeming down, that does not stop me from going for a walk or a run. In fact, I do prefer to run in these sort of conditions. I don't know why. I do prefer running in drizzle. That's the best sort of running weather. Drizzle, a light drizzle is absolutely fantastic. But I don't mind running in this sort of weather, even walking, particularly if I do have a really good rain jacket. And I have bought a $200 rain jacket. In fact, it was $224 with a discount. A Patagonia Torrent Shell. Unfortunately, I don't have that just yet. And so I couldn't test it out. Today would have been a great day to test it out. So I got back from my walk this morning and I was absolutely drenched. And straight away I had a shower. I don't usually do that. I usually wait maybe for an hour or so. Anyway, so you don't care about the weather, or maybe some of you do. You don't want to hear me rambling on about meteorology. You want to listen to me answer your questions and reply to your comment to the best of my ability. So let's do that. Starting off with Kapow 4, who asks, thoughts on the PUA chart, please. Now, I'll be honest, I know most tick codes on the ASX. I'd say 70 to 80%. A lot of the tick codes I don't know on the ASX probably belong to mining exploring companies. And PUA, no idea. And this could be a typing error. So possibly PUA, Peak Minerals. Although that name Peak Minerals does ring a bell. I'd say this is a fairly small company. I'm going to guess market cap of $20 million. Oh, how wrong am I? 168.62 million. So much bigger than I would have thought. Ordinary shares on issue, $2.91 billion. I have no idea what they do, but the question does not ask me about what they do. Thoughts on the PUA chart, please. So that's all I'm going to do. Thoughts on the chart. Peak Minerals. And I'll be honest with you again. I'm being very honest today. I won't forget Peak Minerals anymore. Oh, and I can definitely see why. There is a question about this chart. Now, I'm just decreasing the size of my face, which many of you are probably clapping, applauding with that decision. So the reason I did that is I also want to look at the volume. So really nice price action. In fact, this chart, which goes back to July, really good. If we go back a little bit further, if we go back to this time last year, there was no volume in this company, nothing. Share price was 0.2 cents, 0.3 cents, no interest in the market. There was a really good volume day on the 21st of August. On that particular day, share price rose 150%. And then the next day, share price rose another 40% on pretty good volume. Seems like that was a trigger, but I won't look to see what happened. But there was some sort of catalyst for the share price and an increase in volume, increase in interest in this company. And since then, the share price has just gone, in fact, the chart looks really, really good. An increased interest seems like from the start of May, we saw another bout of strong volume. The share price started to take off, and you could even say it's starting to accelerate. Typically, when I see the share price accelerate like we do see towards the end of June into start of July, I would expect a bit of a pullback. And when I say bit, it could be a fairly big pullback. It could be a slight pullback like we're seeing right now. But sometimes when you get accelerated price action, it can continue for a while. And we actually did see that with Peak Minerals. Now, fair bit of volatility in that. For instance, there were days where the share price rose 7.4%, then dropped 12% and 3.9% in consecutive days, and then rose 8.2% and 11.3%. So you're going to see that sort of volatility. I would have no doubt day traders would be in this, trading this like heck, because they love that sort of volatility. That's how they make the money. Now, the share price has pulled back over the last 5 or 6 days. Got to about 7 cents. Now it's at 5.8 cents. It looks like the share price tried to bounce off the 25-day moving average on Friday. There was a little bit of buying coming in. So that could be a nice little support level. So the chart does look good. But the one thing I don't like here is the volume. As the share price kept on increasing, this volume started to go down. We want to see decreasing volume when the share price pulls back, which we sort of have. But I'd like to see some big volume coming in. And we saw some volume coming in when it started to accelerate, but I want to see some good volume coming in to really give me an indication that there is a lot of momentum behind this company. Because a lot of times when you see a share price of a company rally and then it starts to fall back, you don't see any volume. And because you don't see the volume or any interest in the market, share price just keeps on dropping and dropping and dropping and dropping. So I'd like to see a little bit of volume coming in. Sort of like Loomis Diagnostics yesterday on Friday. So share price was pulling back. We started to see a share price rise again. And then all of a sudden yesterday, there was a massive, I wouldn't say massive peak in volume, not peak, but massive rise in volume on that day. And share price rose about 11% on Friday. And that's exactly what you want to see. Okay, so thank you for that. Kapow, first time I probably ever looked at Peak Minerals. Now, if I was delving a little bit deeper into this company, I probably want to know, I'm assuming they are an exploring company, and are they close to getting into production? I'd like to know those sort of questions, or answer those sort of questions. Now, Gil Saab says, any opinion on Endeavour Group? And Just Jim Cramer says dog stock. But we all know we should go in the opposite direction to Jim Cramer. And if you did that, you'd be a multi-billionaire by now. If you've done that over the last 10 years, you'd be a multi-trillionaire maybe. Anyway, so Just Jim Cramer says dog stock. In this case, I would probably align myself with Jim Cramer, or just Jim Cramer, not the real Jim Cramer. I don't have the biggest opinion of Endeavour Group. In fact, if we go to FinChat, I've heard a lot of experts say this is a great company because it's offensive. Everyone's going to drink, even in good times and bad times, that sort of thing. And even when they were spun out of Woolworths, people were saying, oh, what a great company to buy. But the share price is more than halved since then. And if you have a look at some of the financial metrics, very little growth, which probably you would expect, very little growth. So this company owns some liquor stores, also hotels, that sort of thing. Very little growth. I suppose the dividend yield is nice, but I would expect the dividend to be increasing all that much with payout ratio of 78%. So maybe if you like a dividend yield of 5.2%, but there's a chance that dividend yield could drop if we don't see any growth in earnings. P ratio 16, which seems a little bit high for a company that's not growing all that much. I'd prefer a P ratio of, say, 10 for these type of companies. And even like operating margins, 8.1%, which is lower than what I want to see. I knew this was not going to be a high quality company, but I always have a look at these sort of things, and return on invested capital at 6.6%. So not really much to like in terms of quality when it comes to Endeavour Group. Maybe only thing is if you're just seeking income, maybe. But even then, I think there are better companies that have a nice dividend yield, a similar dividend yield, that are growing. And we see this just in the chart. Now, for me, Endeavour Group, because I don't consider it a high quality company, by my definition, I would only trade it. And is this a trade right now? And you just see, if you have a look at the daily chart, in fact, this daily chart looks terrible. In fact, it's looked terrible ever since. And for some reason, TradingView is not updating. Ever since, well, actually, if we'll go to a weekly chart, so it's what do you call it? It was spun out of Woolworths back in 2021. The chart looked actually pretty good for about the first year, and share price got to a high of 840. So yeah, the share price is up since then. And in fact, this weekly chart looks negative. Weekly chart looks really negative. So that means the PE ratio must have been really high back then, which surprises me. Now, in saying all that, if we just have a look at the daily chart, the share price has been going sideways for a while. So maybe it has found a floor, just maybe. When I say a while, I'm talking about 5 months or so. But you notice I did put a line here, sort of a support line at $4.80. I'm not sure when I put that. And I thought, oh, that looks like in that period, it looks like the share price might be going sideways. So just waiting for a bit of a breakout. And a couple of times it did look interesting for Endeavour Group. Share price might be breaking out, but then the share price just collapsed. Like for instance, on the 26th of August, last time they released full year results, share price collapsed, fell 6.9% on the day. And that was a get out of this company day, trend killer event day. And the share price has just collapsed since then. So yeah, for me, this is more of a trading stock. And even then, I need a little bit of proof before I would even trade this. So right now, for me, not yet. But that's just based off my own investing strategies, not for me. Just because it may not be for me doesn't mean it can't be for you. But otherwise, no, not for me. Sensei 6011, maybe we should say Sensei from now on. Kneppy, are you an investing genius or just gambler on a hot streak? A very nice saying I heard recently and a good question we should ask or ask ourselves regularly at least every 6 months. There were 5 thumbs up. I would not consider myself an investing genius. Definitely not that. I'm always wanting to learn and improve. And in saying all that, if I compare myself to the normal Australian, definitely, I think most of us would be investing geniuses because I would say most of us are much better at investing than the typical person. In fact, a lot of the typical Australians consider investing on the ASX to be gambling, which is completely wrong. And that just shows me that they know nothing about investing at all. And definitely not a gambler. I'm not a gambler at all. Don't like gambling. And I think I've told this story before. I was speaking to a couple of work colleagues, and I just said, there's a throwaway line, I don't gamble. And they said, yes, you do. You invest in the stock market. I went, what are you talking about? And one of the guys said, so I have a friend who lost all his money on the stock market. And I was like, well, he probably put all his money into a mining exploring stock company and it went bust. That's how you lose money. And this guy just remembers this. So he just associates the stock market with gambling and losing all your money. Anyway, so that just shows you there is a bit of lack of education out there. So I don't consider myself an investing genius, and I don't consider myself a gambler on a hot streak. But I think if you really thought about it, I think most of us are probably investing geniuses compared to the rest of Australians. But compared to the rest of investors out there, probably not. There was a bit of pushback against, for compulsory super. PW 4326 says compulsory super is needed. All the education under the sun can't help some people prepare for retirement. I'm in favor of compulsory super and voting, and I probably would agree with that. Another story. I do know someone I used to work with. This person was in the 40s, and they had not saved a cent. All the money they made, they spent it straight away. Which, you can do whatever you want with the money you make. I would try to tell them you have to prepare for the future. No, not going to do that. I want to spend all my money right now. And I can almost guarantee you eventually they will regret that decision. In fact, I believe there was an article I read a few months ago that said one of the major regrets of most retirees is in regards to not investing earlier. Even Warren Buffett said he wished he could invest earlier, which is impossible. And in fact, that's one of my regrets, not investing earlier. Or not even learning about how to invest earlier. Anyway, so there are some people out there who, I suppose, need the help. So in a way, yeah, you're probably right. But I would prefer to invest my money, my super, the way I want to invest in. Even now, even though I do have a lot of control over my super, I can't absolutely control it. But I suppose the next step is self-help managed, SMSF. What's that called? Self-managed super funds. I suppose that's the next step. But then when it comes to that point, there's a lot of paperwork, which is a bit of a turnoff. Anyway, so thank you for the few people who did sort of push back saying compulsory super is needed, including Pee-wee. There's another question about that. Yeah, Stu Percy, totally agree with the concept of financial education skills, but I also think super locks people's money in for such a long time. It compounds, and the returns on super will far outweigh most people investing themselves. Yes, I sort of agree with that as well, because I think a lot of people, as I mentioned, that friend or that work colleague who had a friend who put all his money into the one company and it went bust and he lost all his money, the super does eliminate that sort of thing. It does eliminate that sort of thing. And I would also say most people don't understand compounding. Yeah, so, yeah. But I also believe that financial education should be compulsory. So maybe compulsory financial education and compulsory super. So let's go back to Sideburns, who says, I wonder if that's a sort of a Sid Burns, not Sideburns. Sorry, there was no E after Sid. Any Kneppy thoughts on Doug? I'm trading Doug right now. I might have gone in a little bit too early. Let's have a look at the chart. Little bit. I've traded this in the past. This is my second time I've traded it. Share price probably going sideways. Definitely the downtrend has come to an end, I think. They did release something yesterday about some, what was it? Some sort of legal action. What was it? Legal action. Commencement of hearing in the United States District Court. I tried to read it, but anyway, the day before that, the share price actually rose a fair bit. Well, a few days before, it rose 8% and then fell a little bit on that day. I don't think it's anything bad. Doug is, yeah, it's an interesting company. I'm trying to remember what they do. It's HP, High Performance Computing as a Service. I think that's what they call it. High computing, if I got that right, I'm going to give myself a big pat on the back. High performance computing as a service. That's one of the things they do. They also provide other services. So let's see if that's what they said in their about section. Well, they didn't say that. Don't say that. Or am I thinking about another company? There's Doug and there's... No, I'm pretty sure it's Doug. I'm going to go to their website. Unless they've totally changed what they say they do. Here it is, HPC Cloud. Well, that's something a little bit different, but that is high performance computing. And I'm pretty sure they used to call it high performance computing as a service, but they don't really have it here. Anyway, so geoscience services, seismic processing, land data processing, Doug de blend, time-lapse seismic. So I would call this company, if anything, I wouldn't call it a mining services company, but I suppose, I don't know, engineering services company. Here it is, HPC AAS. There it is, high performance computing as a service. They do have it here. There you go. There you go. Okay. For me, this is more of a trading stock than anything, but it's not a story stock at all. This company is profitable, and I'm pretty sure they're growing. Yeah, nice growth over the last 3 years, 24.3%. Earnings per share has gone back, although I don't look at that because if you have a look at the financials of this company, there could be a one-off. Yeah, see, we have a increasing revenue over time. It's not in a straight line, so we do see maybe some cyclicality when it comes to this company. And they must have not been profitable in the last year. There must have been a one-off. Yeah, slightly unprofitable. Slightly unprofitable. Well, they were profitable last year, but maybe in the last half year they were not profitable. Let's have a look at semi-annual numbers. Yeah, loss of $4 million in the last half year. And revenue actually did pull back, 28.7 million, after a nice rise in revenue after a while. So they did become profitable, not anymore. So I need to see a little bit more consistency when it comes to profitability, growth and profitability before I'd even consider this company to be high quality. So because it's not high quality, it's more of a trading stock. And I thought there was a little bit of momentum in the chart. And you can see the share price had fallen a lot. And that must be because of that weak little period. And before that, this beautiful chart, by the way, it's a beautiful chart. And in fact, if you look at the daily chart, you can definitely see a bit of cyclicality in this company. So share price goes down and up in trends. And I was thinking it was in a downtrend for a while. Now it's moving into an uptrend. I'm not sure if I'd say that just yet. Okay, we'll get rid of the radar as well. Still rating. Okay, so thank you for that. Sideburn. So for me, Doug, more of a trading stock, and it needs more proof. Article Bureau says he's invested in Perseus rather than Northern Star. I think Capricorn or Perseus are better at the moment in the gold miner space. I think this is... I actually don't mind this. Yeah, I do prefer Capricorn and Perseus over Northern Star. Perseus is also in Africa, so they do have the... what do you call it? What do you call it? When there's a word for it, but I forget. Anyway, it'll come to me in a moment. Sovereign risk. So Perseus, typically companies who have their operations in Africa, mining companies have their operations in Africa, there should be a discount. So I'm just going to have a very quick look at these companies' financials, like P ratio, which is a really... not the best way to get or gauge the valuation of a company. But Perseus has a P ratio of 8.4 and a forward-looking P ratio of 8.6, which seems okay. Capricorn, really nice growth. Capricorn also releases Appendix 5Bs and a really nice growth in this company. And in fact, I was trading this company at once. I wish I still was trading it. P ratio 45.4. Forward-looking P ratio 18. So you need to understand why the P ratio is 45. And more than likely, that's because it could have been a one-off in the last year or something like that. So all you have to do is have a look at the last. You can just see the profit going up and down. And Northern Star. Let's have a look at Northern Star. Northern Star overview, P ratio 19.5, forward-looking P ratio 13.4. Share price has pulled back a fair bit, and I think a majority of that pullback was because of a disappointing quarter. Now, I do actually like West African Resources as well. The main reason, well, I've been holding this company for a long time, and a P ratio 11.6, forward-looking P ratio 5.9. And the reason that forward-looking P ratio is 5.9 or really low is because they're bringing another mine into production. I'm not sure the market really understands that this company is going to be significantly more profitable than it is right now. And they also released a pretty good quarter as well. So let's have a look at the chart for some of these companies. And I'll actually talk about West African a little bit more later in the video because someone did ask me about West African and my philosophy when it comes to mining companies. So if you have a look at the weekly chart, actually just the daily chart. So West African is a nice looking chart. No problems with that chart at all. Northern Star has pulled back a fair bit. I was thinking maybe 30%. 23 is a high and it's pulled back, yeah, over 30% since its highs. And in fact, this chart looks pretty negative, particularly in the short term. Share price has really fallen a fair bit. Capricorn, I'm having a feeling this chart's going to look pretty good. Has pulled back a little bit. Could be a nice little buy the dip situation for Capricorn. And Perseus, I have no reason to think this chart's not going to look good either. Yeah, we've seen it pull back in all these companies, but definitely Perseus, Capricorn, West African look better than Northern Star right now. This is just this chart, and that's without me going through the financials. But I gave a small glimmer into what I'm thinking with West African, and yeah, you still get a discount with West African and Perseus just because of fear, a sovereign risk fear. And West African because I have a mine in Burkina Faso, and there was what do you call it? A coup d'etat in Burkina Faso a few years ago. There was all these fears, but nothing happened. Anyway. Okay, I've talked about that. I am Ika. Every time you upload a video, I end up learning something new about companies and investing. Really appreciate insights you share. Thank you very much for your very kind words. Just wondering, when you invest in trading stock, what percentage of your portfolio do you usually allocate to a single position? Please let me know. It depends. It all depends. So, for instance, the other day I took a position in Loomis, but it was a very small position because my confidence level in that was not that high, and the main reason is because of volatility. So it all depends on my confidence level and also why I'm getting in. So for instance, if it's a more of a long-term position, and if I think the company is really good value and it's a high-quality company and I'm in it for the long term, I might put a high percentage of my portfolio into that single position, maybe 5% or so. But if it's maybe less confidence, more of a trading stock, I'm not absolutely sure where I might go, but I have a little bit of confidence it will go up, maybe less than 1%. So it all depends on the situation. And a lot of it's just feel. I do know, I've been told this, a few comments, you need to do a formula. There's this formula, how much money you should put into each position when you're trading. I don't do that. So a lot of it's just feel. Feel, yes, feel. Hong Ying Lim says, hi Kneppy, curious what your thoughts are on BNL. Another T code. I just don't know this one. BNL. And I might know the name like Peak. Blue Star Helium. No, Blue Star Helium. There you go. Okay, first thing, Blue Star Helium share price is below 1 cent. So that's an automatic no-go for me. And you can just see what happened on Friday. Share price went up 1 pip and the share price rose 20%. So you do get a lot of pip traders. Not sure how many, but there would be pip traders who buy at 5, try to sell at 6, and just do that over and over again. They try. I'm pretty sure there are. I have heard there are people who try to do that. And if you have a look at the summary, yeah, so you can just see. And if you have a look at the trade history, what you'll see is share price going up and down by a fair bit. And sometimes in long periods, the share price doesn't do anything. And you can see up 20, down 17, up 20, then nothing, nothing, nothing. Down 17, up 20, nothing, nothing, nothing. Down 17, then down, then up 20. Yeah, anyway, so eventually there's a chance that the share price of this company might just drip towards 0.1 cent. So I do have a real stay out of companies below 1 cent, and I don't have any companies in my portfolio or even trading that are below 1 cent. Last time I did take a position in a company that was near 1 cent was Bioxin at 1.2 cents, but there was a reason behind that. And even then I was, ooh, should I do this? So that's the first big red flag for me. Now, it's a mining exploring company. That's another red flag for me. I don't like trading mining exploring companies because it's all about, a lot of it's about sentiment. It's about sentiment. And then I think it would be beneficial if you could read and understand drilling results. Very important, drilling results. And even then, I have read some drilling results and I thought they were pretty good. Share price drops. On the other flip side, have I read a drilling results where I thought it was bad and the share price rose? Yeah, it has, yeah. And you can just see the volume, massive volume coming in on the 31st. Not sure why. Maybe all it took was one person. Markup of this company. Now, either this company has a really low market cap or a lot of shares on issue. Could be both as well. $16 million market cap and $2.7 billion of shares on issue. So small company with a lot of shares on issue. And if they need more money, you're going to be highly diluted. Shares will just increase significantly. And then eventually they might do a share capitalization, which they should do. In fact, I think there should be a rule on the ASX. Share price of a company can't drop below 1 cent. I don't know how you could enforce that rule. But anyway, all companies who have a share price below 1 cent should be doing share consolidation. That's just my opinion. Now onto the company itself, because you just wanted my thoughts on this company. So I don't know anything about this company, except looks like they do exploring in helium. Aloha Mula 12 flow test results, Lincoln County. Let's have a look at their Appendix 5B. They also raised some capital. That's on the 31st, so that's on Thursday. Now, $4.5 million. Now, for this company to raise $4.5 million with a market cap of 16 million, that's 25% increase in shares on issue. So we're talking about 25%. It's already, what was it? 2.6 billion. So 25% of that. So shares on issue will now be about 3.5 billion because of this one capital raising. Let's see how right I am. So, they're probably doing it at a discount as well. So in fact, 908 million more shares. So I was a little bit wrong because of course a discount. So shares on issue now will be about 3.6. Actually, I was very close. 3.59 billion shares on issue. And that is a problem with these sort of companies. Okay, so let's have a look at their Appendix 5B and the commentary. I'm assuming this company is exploring. Otherwise, it doesn't make sense. Although, as I say, when you do assume, you can make an ass out of you and me because $1,000 of receipts. I won't note that down at all. It's $1,000. How do you get $1,000 receipts? And $3,000 for the first 6 months. So they do have receipts, but come on. I'm not going to pay attention to that. Okay, so let's have a look at the Blue Star Helium. Looks like they also listed on the OTC. They completed the 2025 Galactica drilling program. I wonder if they are fans of Battlestar Galactica. They must be. Whoever created this company is a fan of Battlestar Galactica. And the reason I know that, Galactica and Pegasus. If you ever watch that show, you know what I mean. So those are two main ships, Battlestar Galactica and Pegasus. So obviously, you don't believe me. I'm going to show you right now. If I just Google this, it's going to come up. There it is, Pegasus, Battlestar Galactica, Season 2, Episode 10. Pegasus, Battlestar Galactica. Battlestar Pegasus. Okay, so whoever, and it's one of the things I actually do like about some companies on the ASX. You could actually see that some of these companies and some of the founders of these companies were fans of either TV shows or heavy metal bands like Metallica. And there was another one. Was it Pantera? I think also. Anyway, that's just got me excited. Anyway, completion of all 6 development wells funded by JV partner Helium One. Yeah, I think that's what I'm going to look at this. I don't know anything about helium, how to read helium results. I don't even know the future of helium. So I think the main thing about when it comes to helium is, why are you bullish on helium? Why are you bullish on helium? I'm going to ask ChatGPT. I'm going to ask ChatGPT, why should I be bullish? Can't even spell. Bullish on helium as an investor. Let's see what it says. Even though I left out the being bullish on helium as an investor can be justified if you believe in the growing demand-supply imbalance and helium's critical role in high-tech medical industrial sectors. Here's a detailed breakdown of the bull case for helium. Critical applications, no substitutes, medical, MRI machines, semiconductors, space and aerospace, rocket launchers use helium for pressurizing fuel tanks, fiber optics and hard drives, and nuclear reactors. These industries are growing and helium has no effective substitute in most of them. Supply constraints. This is very important as well. Helium is non-renewable. Yep, you know that. It talks about how it's formed. Limited production sources. Geopolitical risk. Extraction challenges. Rising prices and volatility. Prices have been volatile, but generally rising over the longer term. Future scarcity may lead to pricing power for producers. Emerging producer and exploration upside. There's Helium One. Helium One was mentioned. Companies like Desert Mountain Energy, Helium One, and others are exploring pure play helium fields. Investors are better on picks and shovels plays in helium-rich areas like US, Tanzania, and Saskatchewan. Green energy and tech boom tailwinds, key risks to consider, etc., etc. Oh, I've never actually thought about doing this with ChatGPT. It's good to know where they get all of this information from. Anyway, so that's all I got when it comes to Blue Star Helium. I'm going to ask you a question. Why are you bullish, if you are bullish on helium or that company? Leave it in the comment section of this video. Trade Hooper says, do you have any concerns about the coal sector given that BCB, Bowen, is in trouble, or do you feel that those issues are specific to Bowen Coking Coal? I've noticed that you are positive towards the fuel coal companies, so it seems you don't have any concerns about the sector in general, or maybe you are particularly picky with the coal companies you select. I would say I'm picky and I'm looking for instance, I'm trading to Whitehaven and Coronado, and the reason I got into Coronado was simply because of their announcement. That's it. Simple as that. So Coronado had I thought a pretty good update the other day. So share price has been a little bit under stress. Where was it? The quarterly report. That's right. In fact, I like this quarterly report. Share price did rise 28% after that. And you can see the volatility after that. Share price has been all over the place, which I don't like. But anyway, and I'm thinking of getting out of these trades. And Whitehaven was simply a trade. In fact, if you have a look at the trade or the chart, it starting to look bullish. And the other thing is coal prices, and this is just looking at one. If I can find it here, there it is. This is Newcastle Coal. Coal prices looking okay. They're looking okay, or the chart does look okay anyway. So that's it. Everything else you can't control. Like, for instance, the Queensland coal royalties, can't control that. That's up to the government. And Roger Dawn says, it won't be the only Queensland coal company to go under. Few of the privately listed mines like Batchfire and Billawheeler are teetering too. We also read the other day that there were some layoffs at a New South Wales coal company as well. New South Wales coal company, I think it could have gone into administration. Dartbrook coal mine plunges into administration. There you go. entered voluntary administration and receivership due to financial difficulties. So maybe it's just not Queensland. Might be also New South Wales. But that means there might be less mines, coal mines in production. That could be beneficial for the rest of the coal miners. Debts of $210 million. Yes, debt. The number one destroyer of companies. Debt. Debt is, well, I wouldn't say debt is bad, but you don't want too much debt. Okay, I've already answered that. George Nowak. Also, which rare earth producers do you follow? This is a very easy question to answer. Linus. That's it. Linus, because I don't know any others. Linus is who are the rare earth producers. Linus is the only one. Well, it's not. There might be. No. Aluka is mineral sands, isn't it? No, companies. Here we go. Linus Rare Earths. There's a few others around the world, mostly in China, few in United States, but I could only name you one, and that's Linus Rare Earths. The rest of these I have never heard of before. There's Arafura Rare Earths, but that's not in production. That's not in production. And Aluka, Aluka developing rare earth refining capability in Australia, but it's not in production. So the only one in production is Linus Rare Earths. And yeah, so we have seen the share price of Linus Rare Earths be a fair bit of volatile, but share price is in a beautiful uptrend right now. I wish I was trading this one because I saw the share price pull back a bit ago, back in May, and I thought, oh, this could be a good time to buy in, but no. Well, they might have been in July. Anyway, so the chart looks pretty good. Okay, a couple of comments on Boss Energy, some clarifications. So why the share price of Boss Energy drops wasn't because of financials. Yeah, I knew that. It was because of the it was the expectations of the expectations. My understanding, it was due to the comment about the quality and volume of deposits they actually have. So yeah, expectations drove the share price down, not the financials. Yeah, the point being that the entire sizing of the business is now unknown and under scrutiny, and that they were doing to commission a study. And then K23 Man, yes, they made a comment that they were reviewing what they can achieve their nameplate, whether they can achieve their nameplate capacity. And then Extractor says, oh, this is completely different. This is having a go at the management. Boss Energy will keep the market informed. WTF, after 40% decline, the entire board should be dismissed at the next AGM. And then APAT mentioned the CEO already did a dump and run last week. And I have heard that criticism. I don't follow Boss Energy all that much, but the one criticism I did read is that the CEO just went bye-bye before all this happened. Board and management transition on the 24th of July. I suppose this could have been read really negatively. So Duncan Craib has informed the board he will step down as managing director and CEO as of 30th September. So maybe he saw what was happening. He got out before he was pushed out. Maybe, I don't know. But I have heard a lot of criticism about that as well. And we'll keep the market informed. That's another interesting question. I've heard, this is on a few podcasts, I've heard a few experts, and when I say experts, I mean private investors, complain about the lack of, the lack of information being released by companies, and they release the downgrades. And the question is, why did he not release, no, not the downgrades, but when they released bad financial results, like bad half-year, full-year results, and the share price collapses or rises significantly, but mainly because it collapses. The question is, why did the company not disclose they were having a bad half-year or bad year? Why do we just find this information right now when they release results? So there is a chance the company should have released information before they released their quarterly results. So I do actually sort of agree with that. When a company knows, and I'm wondering if the ASX will actually give a please explain to Boss Energy, because when a company knows something's going wrong, they should disclose that information to the market as soon as possible. So thank you for those comments, Extractor and Trash Boat. Sometimes I don't know all the information. I've already answered that. Rick Thelling says, so Michael Hill passed away, cancer. So Michael Hill Jewelers out of New Zealand. And just Jim Kramer, Terry Jean Bollier passed away last Thursday, heart attack. And then I did not mention anything about Terry Jean Bollier passing away. Hulk Hogan, I believe. I'm pretty sure that's Hulk Hogan. 99.99% sure that's Hulk Hogan. Yeah, Hulk Hogan. There we go. Anyway, so Hulk Hogan did pass away, didn't mention it, and then he came back and said, I don't care about Hulk Hogan. But anyway, in fact, I shouldn't have said that. I should not have said that because I'm pretty sure I left that comment in. Anyway, so that's life. People die. People are born, people die. That's just life. How old was, I'll be honest, how old was Mr. Sir Michael Hill? He's 80, late 80s. That's a pretty good life. 87 or something, 86. And how old was Hulk Hogan? He must have been like 70s, maybe 60s at the youngest. 71, yeah, there we go, 71. So, you get to that point when, unfortunately, things happen. And cancer. Cancer. Sensei also asked another question here. Do you consider yourself a full-on investor? It seems many would say you are more of a hybrid, investor, trader, trader, investor. You are definitely not a full-on trader, as you have self-admitted openly in the uploads. Definitely not a full investor. I would have started off as a full investor. And definitely not a full-on trader. Definitely not. I would say the vast majority of my positions right now are long-term positions. Yes, most of my positions are long-term positions in high-quality companies. And I'm always sort of adjusting what I do, and I'll just explain that a little bit later on in another, when I reply to another question. So I would call myself a hybrid, definitely a hybrid right now. Neither full-on trader, not a full investor. And I will also admit I love trading. I love finding these companies. For instance, if you have a look at my trades right now, so for instance, just discovering like Stealth Group or Shape Australia, Genus Plus, Superloop, Catapult, just discovering these companies, and then they do well, and I'm holding them for years and years without. And if I was just a full investor, I would probably never hold these companies, and they just do really well. Anyway, and I love holding companies for the long term as well. Jeez, it's got the best of both worlds. When you not fully understand, but when you can embrace both investing and trading, I think it's actually really beneficial to both. Anyway, so and there's a chance I might become more of a trader than an investor. I think that's more likely in the longer term for me. Stu Percy says, I've been thinking about same thing about Race. It's a company I've been wanted to buy for years, but it's been so expensive. I am assuming you're talking about Ferrari. And I have a feeling Ferrari's ticker code is Race. And I think the whole reason I knew that is because I think it's the best. I think it's the best ticker code in the world. Well, maybe not. So Ferrari has a ticker code called Race. And I do remember looking at this company a few years ago and going, whoa, geez, why is this company so expensive? Well, because it's Ferrari. It's Ferrari. Hello, Ferrari. I haven't looked at this company for a while, though. Ferrari. This company would be listed or dual listed. I'm just going to go to the New York Stock Exchange. I'm just going to have a very quick look at Ferrari. In fact, my sister has to buy a new car, and she said in a chat, if I can find it, which I won't be able to find it now, not liking searching for a new car. And I wanted to reply to the chat saying, I will help you, not help you, but I will find a new car for you, and I will buy you a Ferrari. So yes. Anyway, so let's have a look at Ferrari. Is this a high quality company? Well, I would say it's a high quality car, although I don't know Ferraris all that well. Revenue growth, it's the first good sign. We're talking about above 10% revenue growth over the last 3 and 5 years, 9.5% over the last 10 years. Earnings per share growth, really high. We're talking about 20% over the last 10 years. So this has all the makings just with growth of a high quality company. So Ferrari doing really well. Gross margins 51.2%, operating margins 29.1%. 2 thumbs up there. Return equity 43.9, return invested capital 21.5, 2 thumbs up. What else? Not much debt. Debt equity 0.9. So maybe a little bit of a slight red flag there. Don't really care about the dividend. When it comes to high quality companies, I push that aside. And PE ratio 49. So it comes back to the PE ratio 49. Forward looking PE ratio 46. One thing I like about FinChat is they do have these bulls and bears say, but this is from Morningstar, and I don't have the highest opinion of Morningstar. So if you're bullish on Ferrari, you might have a look at the bears. So the bears say range extension is pushed too far. The differentiation between new models becomes thinner, and the overall exclusivity of the brand falls. With too many Ferraris on the road, pricing power is reduced. Poor adoption of EV-powered Ferraris. Volume growth is kept tight, thus operational leverage is reduced slowly. Anyway, so P ratio 49, but is that historically high? Maybe for a car company it is high, but maybe for this company it's not. Let's have a look at the P ratio history of this company. And we have seen last 10 years multiple expansion. So 10 years ago, the P ratio of this company was like 20. So we have seen a bit of a multiple expansion period for this company. But anyway, it does look expensive. If that's who you're talking about, you could be talking about a completely different company here. But I'm just assuming that was a ticker race. Blacktop Imager says, looking at volume indicators this week, I can't work out ATT. They changed the name recently, but no news. Not a particularly standout story, probably an upcoming cap raise, but the volume is well above normal on a steady price. I would like to know your take. ATT, this is another one where I go, what the heck is this company? ATT, yeah. Altitude Minerals, yep, never heard of this company. Share price 1.8 cents, so it's not that high. Share placement, change of company name. So who do they used to be called? Let's see if I knew this company. I wonder if this company has operations at, or has projects at altitude. Copper Search. So they were looking for copper and they went, no, what we're going to do is we're going to call ourselves altitude because we have projects at high elevation. I have no idea that's why they did it. They did release an appendix for 5B on that day as well. Let's have a look at what they're doing. Did they release this as Copper Search? Yep, they did. Not as Altitude. Heavy mineral sands. Oh, they're in South Australia. That's not high elevation. New South Wales as well. So it looks like they're in Australia. Okay, they actually do say why they've changed it. No, this is exciting. The change symbolizes a shift towards a broader commodity exploration strategy and a focus on leveraging its highly experienced team to identify unrecognized potential and drive value for shareholders. Okay, so they're just transitioning from copper to more diversified, which actually is not that bad of a strategy. Although I would say if you're a small company, focus on one particular commodity and then expand, because sometimes they can have too many fingers in pies or something. What's the expression? Anyway, the question was not about the company itself. It's about, they changed the name recently. Yep, no news. No particularly standout story. Probably an upcoming cap raise. The volume is well above normal on a steady price. So let's have a look at the chart of AT&T. Oh, okay, so chart is horrendous. Price action, horrendous. Share price just keeps on dropping. Maybe that's why they changed the name. Maybe they went, we want the share price to get to a much higher level, hence altitude. And there was massive increase in volume on that day when they changed the name. So someone saw them change the name and went, oh, I've got to buy this company. It seems like that's what happened. Now, just before that increase in volume on that day, we did see a little bit of an increase, subtle increase in volume before that. So it started in May. So this could be an indication because of the theory that, maybe not a theory, but maybe there's research on this, which I should have a look at, that volume precedes price. I've read that a few times now, and maybe this is an indication that things are moving in the right direction for altitude. But again, this is a mining exploring company, and I have very little interest. But just having a look at the increase in volume, why? By the way, the share price has pulled back. So interest on that day, and the share price has pulled back. I have no idea. Okay, Happy now says Viva Energy has all these negative things, drops like that. Boss Energy does what it does and plummets to the bottom of the Atlantic Ocean. Thanks again for another lovely wrap up. And then Just Dream Kramer says Viva had a bad financial year 25 already priced in, and that's what I would have said. Problem with Boss Energy is it's really hard to do a valuation of Boss Energy. In fact, they're not generating any money, cash flow. So if you try to do a valuation of Boss Energy, and in fact, if you've got like 100 people to do or try to do a valuation of Boss Energy, you're going to get a massive wide range of numbers, But Viva Energy, they are much bigger. They have profitable, and I would say there is more, or there's less range of valuation possibilities for Viva Energy. Much less range. The range is much narrower. And as Just Dream Kramer did say, they had a bad year. You can see that by the chart. Share price has dropped a fair bit. And any sort of negativity after this, share price has started to rise though. So there was a little bit of positive momentum coming into share price. And I think that particularly a negative report or update did sort of destroy that positive momentum. Now, the share price has risen a little bit after that, by the way, so maybe not. Anyway, so share price has dropped a lot. So there has been a lot of negative sentiment in this, and I think the market was expecting some bad numbers. And the market, even though it was expecting some bad numbers, may have been a little bit disappointed with the numbers they did provide. I've already answered that on BNL, haven't I? Yes, I have. But Sensei says, thoughts on MSTR, Microstrategy, including Class A 5-year chart analysis and overall analysis for the audience. So overall analysis of the company. So let's do that, MSTR. Okay, so I had to redo this question from Sensei6011. Thoughts on MicroStrategy, a 5-year chart analysis and overall analysis for the audience. Now, the reason I had to redo this is because I spent a few minutes trying to get TradingView to work. And when I mean work, I mean comparing MicroStrategy share price or chart to Bitcoin, because MicroStrategy owns a lot of Bitcoin. Seems like that's all they do. I don't really know this company all that well, but you have to just compare the two. MicroStrategy share price to Bitcoin, and this is it. Finally got there. I'm not sure what was wrong, but anyway, finally got there. And this is over the last 5 years, and there is a high correlation between the share price. So Bitcoin is in blue, and the share price of MicroStrategy is in red. And there is a high correlation. So if you ever wanted to buy Bitcoin, but you didn't want to buy the actual Bitcoin, you just wanted exposure to Bitcoin, maybe MicroStrategy is a company for you, because there is a correlation there between Bitcoin and MicroStrategy. And that is all I'm going to say in response to this particular question from Sensei. So MicroStrategy, Bitcoin, influenced by Bitcoin. Okay, Sensei also asks, Metro Mining might be a nice current sleeper to pick up now and hold a bit long-term for some gains. Bauxite, alumina, aluminium. I've mentioned Metro Mining a few times, not a shareholder. They have operations or a mine north of Weipa. So bauxite, and they seem to be doing fairly well. They did release or do release Appendix 4Bs or 5Bs, and their most recent quarter was fantastic, in my opinion. Quite fantastic. They do have a down period the first quarter of the calendar year because it is wet season up there, and they do close down operations for a while. So this particular quarter receipts, 114 million, operating cash flow positive, 25.8 million, and free cash flow positive by a fair bit as well. Cash on hand, 28.7 million. Because they do have a pretty bad third quarter, in terms of receipts, they need to have pretty good. The other 3 quarters need to be pretty good. Market cap of this company is 400 million. 426.87 million, 6.1 billion shares on issue. That could be a turnoff for some people. Share price of Metro Mining, hence, is only 7 cents. 7 cents. Chart has been looking good. In fact, we'll go back here. MMI. Metro Mining, we have to go back to candlesticks, and we'll get rid of MSTR. This is the weekly chart for Metro Mining. In fact, a beautiful chart. This is a beautiful chart. Weekly chart. I'm pretty sure I've done this recently. So Metro Mining's weekly chart looks fantastic. A bit of a turnaround back in early 2024. And I actually was following this company at this point in time. I liked it. So I thought they were about to turn the corner. I just wish I took a position. And the share price or the daily chart looks really good as well. So I think the chart looks fantastic for Metro Mining. Yeah, so weekly and daily, both time frames. So thank you for that, Sensei. And also, I think in the end, it also has to do with your thoughts on bauxite and alumina or aluminium. Trader Hooper says he questioned the first guy firing at Pilbara and hiring at Telstra. However, since then, I've looked at the charts, and if I were already holding Life 360 and Megaport, I wouldn't be selling either one of them. So let's do that right now. And I would probably say, without looking at them, I would probably agree with you because Life 360's chart looks fantastic, maybe a little bit overvalued. I would suggest on Monday the share price will pull back a fair bit because of what happened on NASDAQ. And I think the same thing will happen with Megaport. Share price will pull back a fair bit. And this chart looks pretty good as well. Yeah, so yeah, if I was trading both of these, I probably wouldn't be selling out just yet. Just wait for any sort of sign the share price might be turning down. I like the high companies of Qoria and Wisetech, just would find some rubbish elsewhere to sell, or maybe do a sell half, buy half to hold both 360 Qoria and Megaport Wisetech. Appreciate your comments. Thanks. If I had to choose between these three companies or four companies, I would. Wisetech for me is a long-term hold. I wouldn't be trading Wisetech. Qoria, I do like the potential of Qoria. Life 360 chart looks fantastic. The valuation and Megaport, I'd put that 4. I'll put that at the lower end, just because Megaport can be really volatile. And if they don't release Appendix 4Cs anymore, and that used to be the reason why the share price would climb or drop by a significant amount. You can just see the volatility in Megaport over the last 5 years. So more of a trading stock for me. I have traded this in the past, not trading it right now, and I'm not even sure if it's a long-term hold. And it's at a resistance level as well. Okay, Robert John Reed mentions Gary Glover, and I do like Gary Glover. So Kneppy, you're my favorite, but listen to Gary Glover. He always mentioning BCP when analyzing charts, wondering what that means. I have no idea. BCP. So let's see if K23 man is right. If it's VCP, which would make more sense. I'm just gonna BCP technical. Let's see if there is any BCP technical analysis. Oh, no, that's a BCP. There is a stock with a ticker code BCP. So no. So and VCP, volatility contraction pattern. This is something I don't know anything about. Volatility contraction pattern. And I also say that I do learn a lot of stuff from like Gary Glover. There's a few other technical analysis people I listen to or watch, Carl Cargalingo, and there's also the guy who does what's his name? I'm terrible. I can't remember names. In fact, what I'm going to do now is have a look because he does send. I do get an email from him, not personally. Jason McIntosh from Motion Trader. He does release videos twice a week. He also does a video with Self Wealth. I do learn a lot from him as well. Jason McIntosh, Motion Trader. Carl Kangal. Oh, I can't even pronounce his name. He's on Market Index. He does a lot of technical stuff on. Here it is, Senior Editor at Market Index, Carl Capalingua. So I do learn a lot from Carl, Jason, and even Gary Glover. But I don't know anything about volume contraction pattern. And I'd say those three fellows know way more about technical analysis than I do. So I'm still in my learning phase. And what I'm going to do is just Google it very quickly. Is a technical analysis pattern used in trading, particularly by growth stock investors like Mark Minervini, to identify potential breakout opportunities. It signifies a stock price consolidating after a strong uptrend. Oh, I do like that. So I should learn a little bit more about this. But I do believe that when it comes to technical analysis, keep everything really simple. I've seen a lot of technical analysis people have so many things they look at, and if you look at their charts, it's just full of stuff. And I just believe keep things as simple as possible. But I have no idea what VCP is. I could not tell you right now. And I'll learn one day. HBK Forder says, hey, Kneppy, I'm wondering what your thoughts are on Sol Pattinson post-merger with Brickworks. I've watched your video from about a year ago and agree that TPG and New Hope as a large percentage of the portfolio is a turnoff, but with Brickworks, they're going to be more diversified. I'm looking for a high-quality ASX company and feel like Sol Pattinson could go on a CBA run or CBA-like run. Thanks. I still have my thoughts that I don't absolutely love what Sol Pattinson owns, but there are definitely things to like about Sol Pattinson, including the fact that the dividends have increased significantly over time, and they keep on increasing. So it's definitely the sort of company you'd probably buy and just keep in your portfolio for the long term. So I'd say it's a high quality company. There it is. It's a high quality company. Sol Pats, they're definitely a little bit more diversified with Brickworks. I just wish, if I compare, say, Sol Pattinson to like my high quality portfolio, it's night and day different. I'll definitely prefer mine, which is a benefit of being an investor like me or you. You can buy these individual companies, but Sol Pattinson is definitely, or could be, sort of like a pillar or a wall, whatever you want to call it, of your portfolio because it's high quality. I just don't like some of the companies within or some of the companies they own, but they're more than that. They are more than that. Could it go on a CBA run? Now, Sol Pattinson with the share or with this merger, share price has popped up a fair bit. Share price popped up a fair bit. You can see it range bounding for a while there. Well, that's the daily chart. But if you have a look at the weekly chart, by the way, this is probably what I'll do with Sol Pattinson is I'll just put in the 200-week moving average. And it does play ball. It does play ball with this rule. On occasion, share price will get close to 200-week moving average and fall below. And that's a time to really think about buying at this company. So we're talking about 1998. 2008, 2009, a few times in the mid-2000s, COVID-19, and also in July. I still remember this. In June, July 2022, I was thinking, I should buy Sol Pattinson at these prices. Share price right now is a little bit above the 200-week moving average. In fact, the share price got very close just before the share price went on a run. This was in March of this year. That was another good time to buy after consolidation period. Could it go on a CBA run? I don't know about that. I would not think Sol Pattinson is cheap at these prices, although CBA was not cheap either. I don't know. It could. I just don't know. I think it'd be really hard to figure out which companies could go on another CBA run. Maybe none for quite a while. P ratio 25.7. Although plus with the merger, it's just how everything's going to work out. So I'm on the fence with Sol Pattinson right now. Aaron Briggs says, hey, Kneppy, would you consider doing a video on your rules? Why 10% for short-term, etc.? Any differences for long-term? I'm newish, enjoying your content. I can do this. I will do this. In fact, what I should do is I should do a standalone video on this. Why 10% for short-term? Yep. And any differences for long-term? Yep, absolutely. There's big differences for long-term. So I will do a video on that. And there's just Jim Cramer saying, having a go at me for ignoring the passing of Hulk Hogan. But I talked about this earlier. I'm not ignoring it. The man was a god. Well, if he died, then he couldn't be God. Aren't gods immortal? For some reason, I thought Hulk Hogan was once the governor of Minnesota, but that was governor of Jesse Ventura. Yeah, and Jesse Ventura was in Predator. So for some reason, when I first heard Hulk Hogan had died, I just thought, oh no, the ex-governor of Minnesota has died. But then I just realized I got my people mixed up. But anyway, just Jim Cramer. Hulk Hogan. Kirat Singh says, thanks, Kneppy. Siteminder sure looking good, up 6 days in a row. Clinuvel Neuren charts looking positive as well. So Siteminder was my chart of the day. I'm pretty sure it was. It's one of the reasons why I write notes, just to see. Chart of the day, Siteminder on July was that the 30th or the 31st? That must have been the 31st. So let's have a look at the chart for Siteminder. Did it go up on Friday? Oh, I just wanted to say, I want to see the share price pull back to 485. Yeah, the share price is going on a bit of a run, waiting for a pullback. Pullback may never happen, but I think we're going to have a pretty negative day on Monday. So Siteminder may pull back 5%. And if it pulls back 5%, we're talking about share price dropping to, say, 490 or so. Now on to the other two. Now, first one, I own both of these, by the way. Clinuvel is in my super. And the chart looks terrible for this one. Well, it did look terrible, but I just thought the valuation of this company is insane right now, insanely low. And I'm not sure why the market was selling off. And whenever the share price tries to go on a run, the sellers come in. And yeah, the chart has turned. So this is the first time I've seen the Clinuvel chart for a while. And a lot of times when I own companies for the long term, I won't have a look at the chart. Maybe every 2 weeks I'll have a look at the Clinuvel chart. And yeah, it's turned positive. Share price did drop 4% on Friday, however. And I own Neuren Pharmaceuticals, and I am now trading Neuren Pharmaceuticals. So this is one of those situations where I own and also trade the company. And I just went, yep, I'm gonna buy some shares at about $14 or just above $14. So at this point in time, I'm loving this trade for Neuren because it was looking pretty good. This is exactly what I'm looking for. So we see the share price in a downtrend, and then we don't see a initial massive rise in share price, but the share price just starts to turn up. That's it. So both charts looking pretty good, although I do prefer Neuren over Clinuvel, and I do like Siteminder as well. DG Home and Garden says Jumbo looking good, low risk. This is one that has been on my radar for a while. Jin or Jumbo Interactive. Share price hit a support level. That support level is at 950. Look at it bounce off that support level perfectly. I didn't really bounce hard. So this one, getting above 1050 would be a really important level for Jumbo. Nice little break above 1050 would be significant. And it's very close to getting above that level. So this looks like it could be going on a run. Could be. Not just there with Jumbo just yet, but this is definitely on my watch list. Capel Seth says, what do you think of Medical Development's Appendix 4C? I was a little bit disappointed. This is one of the Appendix 4Cs I was looking out for. They've had a really good 2 Appendix 4Cs recently. So if we go back to the last 2, these were, I wouldn't say standout Appendix 4Cs, but definitely really good ones. Not standout, but really good. So operating cash flow positive, free cash flow positive. This was the March quarter. Nice receipts above $10 million. Operating cash flow positive, almost $2 million. In the December quarter, cash receipts got above $10 million and operating cash flow positive 1.9. So 2 positive quarters in a row for medical developments. I thought, things are turning positive for this company. And I was waiting for it. I took a position in medical, but not a trading position, more of a long-term position. So even though the company does release something negative, I'm still willing to maintain it because I do think this company is starting to turn around. But receipts down to 8.5 million, just because receipts are lower isn't necessarily negative. You do have to have a closer look. And operating cash flow negative 981,000. So you do have to have a closer look. Now, the problem here is they talk about the second half. Positive operating cash flow delivered in the second half. Well, for me, that's a slight red flag that they're focusing on a half, not a quarter, because this is a quarter. This is a quarter report, not a half-year report. And they're still talking about financial year 25. They're just not even mentioning the quarter. They're just talking about the full year, the half year. and that is actually a little bit of a red flag for me. What I wanted to see was any sort of revenue. Now, they did mention group revenue for the quarter was $10.2 million, 0.7 million up from the prior corresponding period. So that's last year, not the previous quarter. So I'm just wondering, and we might get a little bit of indication in their half or the full year results when it comes to what do you call it? The difference between, well, this is a quarter. So sometimes I want to know why there's a difference between receipts and revenue. Sometimes a company will point it out that this revenue that they did, like timing issues, like the revenue they did get in the quarter, haven't received the cash just yet. They expected to receive it, but it came in after the quarter finished, so expect that in the next quarter. So sometimes you will see that comment from management, but I did not quite see it in this particular announcement. Outlooks are really good as well. Not for this, but I like to see outlooks. But this was financial year 25, which has come to an end. And anyway, so a little bit disappointed with medical developments. And we can see that in the market reaction. Market reaction was negative, but I do think this is a bit of an overreaction. Now, you can see the share price running up significantly in January when they did release their December quarter results. So the market took notice. And then the share price just collapsed. And then when they released their April and March quarter results, share price picked up. Not quite the same response. Share price has been going sideways ever since. Anyway, the share price has dropped the last 2 trading days. I don't think it's overly negative thing. But definitely, I think the share price downtrend has come to an end. And I still think things are looking good. Things are looking better for medical developments, even though they had a disappointing quarter. Trader Hooper has given us some insight into BSA. I haven't looked at this one just yet because they lost a lot of contracts and they have a lot of cash compared to the markup. But he also mentions, no, this is different. He mentioned something else about BSA had they had something else they had to pay or something. Also interesting that BSA released that announcement this morning regarding the share price movement, which basically restated all their bad news just in case people missed it the first time. Kind of, why are you buying announcement? I initially missed it because it wasn't marked as price sensitive. Oh, that's right. That's why I included this, because I definitely missed this. If it's not marked price sensitive, more than likely I missed it. Yeah, quarterly update Appendix 4C, share price movement. I suppose technically this is not price sensitive, hence they didn't have to mark it like that. And yeah, so this is, I haven't read this yet. This is sort of like getting ahead of any sort of price query or even a query from the ASX, so just like a query. Even though I don't think the ASX would have gone down that road. But anyway, in light of the increasing trading volume of BSA's securities and share price appreciation subsequent to the prior announcement, they wish to reiterate several matters contained in the prior announcement. Okay. They continue to face significant challenges following the previously announced loss of the UFO services contract and significant reduction in smart metering contracts. And yeah, this is just what they've already announced. As noted in prior announcement, has thus far incurred $8.3 million in restructuring costs, of which a cash impairment of $7.3 million related to redundancy is yet to be incurred. So that's very important as well, which I think Trader Hooper mentioned in a previous comment. Anyway, so yeah, the BSA just saying, what the heck are you doing buying some shares? And I think the market just got excited about the amount of cash the company had compared to the cash. The market, I think the market got excited about the amount of cash the company had compared to the market cap. And it did make me have a look, but not a close look. Oh, Mace 552, you mentioned that you wouldn't be trading any mining companies going forward, but I'm curious why you've made an exception for West African. Okay, so let me just clarify. So I'm talking about short-term, more of a short-term trading. So, but when it comes to mining, so short-term trades, more of a technical signals, that sort of thing. So when it comes to West African, it's just valuation. And I actually do own a few mining companies just because of valuation. I think they're cheap. And when it comes to those sort of situations or those sort of setups, I don't necessarily care about the chart or the technical analysis as much because it's more valuation. So this is a slight adjustment I've made to how I invest or my investing strategies. So I have my long-term, high quality. I have my trading, which is just technical analysis. But in between, there's a bit of murk. There's a bit of murkiness. There's a bit of murkiness, and that is where West African falls in. So it comes back to valuation. So that's the only reason why I own West African. I just think there's some really good value to this company. And that's true for my other mining companies as well that I own. And these, like West African, I've held for 4 years. I've held for maybe even longer than that. So this is more of a longer term proposition for me, and it's just valuation. So even though technically I'm not trading West African, yeah. So it's in that murky area, sort of in between high quality and trading. And I do own a few companies in that murkiness. So hopefully I've made that clear. Couple Seth says, are you buying EZZ now that it's down? Any thoughts would be welcome. I did. I am doing a video on EZZ, their Appendix 4C, along with Before Pay, and also ABV, which is ABT Braking Technologies. I'll be doing a video on those three companies in the one. I might be recording that video today or maybe tomorrow. So I just talk about EZZ there. I thought their Appendix 4C was good, but I won't mention it here. And I've just noticed the chart is looking much better. And this is another case where I think there is some bit of value. Now, I do own EZZ, but I'm not trading it. No reason why I'm not trading it, but I still own EZZ is valuation again. So that murkiness seems to be correlated to valuation. So I do own EZZ, but I had a close look. Share price took off. Nice little run. Share price has pulled back. And it's pulled back a fair bit. So it's gone from $2.80 down to $2.03. Need a bit of support here. EZZ needs a bit of support. We'd also see a bit of increase in volume, which I would think it may be value investors. I don't know. So I still own EZZ, but not trading it just yet. But it's looking interesting. And also the quarter, I think the quarter results were pretty good. Oh, this one gave me a bit of a laugh. Gavin, YouTube. 90% of hot copper posts, bloody shorters, bloody day traders, manipulation, the ASX is a joke, ASIC is a joke, sack management, but there are good posts occasionally. That's exactly what I would say. Among all the crap, all the absolute dross, I like that word, dross, among all that, there are occasionally some good posts. But my problem is you have to go through so much crap to get to those good posts, which is unfortunate. And it's so true. So many posters just, they're blaming everything. Shorters, day traders, manipulation. The ASX is a joke. When the share price of a company they own drops 40%, it's everyone's fault apart from themselves. Sack management, get that a lot too. Management suck. And I just wanted to go in there and say, why did you own this company in the first place? I just wanted to say that time and time again. Why do you own this company if you hate the company so much? You think the management suck. Why? Anyway, so a good post from Gavin. Interesting question from Sensei. How investable real companies are on the ASX in August 2025? Also, how many approximately are on New York Stock Exchange and NASDAQ? I think the first question here is, how do you find investable companies? So you're talking about the real term, the long term, not the real term, the long term. So if you're talking about the long term, I'm not sure why you've included August. Are you talking about how many investable companies reported in August? And I would say very few, because most of these companies that did release Appendix 4Cs or even 5Bs, well, the 5Bs are mining companies, so I ruled them out straight away. And talking about real investable long-term companies, so high quality, rules out mining companies. But when it comes to other companies that release Appendix 4Cs in August, oh, no, you're talking about August, not July. Okay, forget everything I just mentioned there. How many investable real companies are on the ASX in August 2025? Let's ignore reporting. Okay, I can actually give a very slight answer to this using a screener. Okay, I'll use a very simple screener I have done. I'm going to use, I'm not sure if I mentioned this in the video, I've definitely mentioned in one of my bank videos, I have this new screener. I'm calling the rule of 10. This is my high quality screener. And of course, it's not working. Oh, here it goes. This is my new rule of 10 high quality screener. And all I'm looking at is operating margins, revenue, and return on invested capital all have to be above 10%. I've got 8% here because I'm being no, I'm going to keep 8% there. So you could call this the rule of 8. So 5-year average in operating margins, revenue, and return on invested capital need to be 8% for a company to be high quality. Also, only companies above 100 million, just to eliminate. I noticed there was a few really small companies that actually fit this criteria. So when you actually do this, you get, in fact, we'll have a look at the ASX first. And you might be surprised how few companies fit this particular screener. 43 fit this screener. So when I did this for 10 for each, it was half that. I think it was like 22. Yeah, 22. So only 22 companies fit this rule of 10 high quality screener. And I actually, as I think more and more about this screener, I like it. Now also rule out mining companies and also capital markets, just because there was a few, what do you call them? If you run the capital, or include capital markets, you get companies like, where was it? Oh, MMF Capital, HMC Capital, Plato Income Maximizer, Australian Ethical Investments, Hearts and Minds Investments. I just want to rule out those just because that's just how I invest. I don't consider those to be companies. They're stocks, but not companies. Anyway, so if you run this screener, you have to run it again, 22 companies who fit this screener on the ASX. Now, if you lower that to 8, you get 43. So there's not many companies. And you have a look at the top 5 companies on this list: CSL, Wisetech, Pro Medicus, REA Group, Technology One. And I did a video on this, bank video, just mentioning if I had to name the 5 highest quality companies on the ASX, I just gave myself that question. I would have chosen these 5 companies. And that's when made me realize when I did this screener, ooh, I could be on something here. So there's 22 companies on the ASX. If you have a look at the New York Stock Exchange, you're going to see 64 companies. Not a lot, is there? And on the NASDAQ, there was, I can't remember now, 86. Not a lot. Not a lot. So I actually really like this screener. There you go. There you go. Anyway, that's it's all based off the opinion or your definition of investable real companies. So for me, that means high quality companies that you want to own for the long term. And yeah, so not many. 22 on the ASX by my rule of 10. Rule of 8, you increase that to 43. Not many. Oh, now we got some Leech comments. I actually did Google what to do or keep leeches off, and DEET spray apparently works. The other suggestion was wear long pants and then tuck your pants into your socks. Not doing that. But anyway, so it seems like DEET spray is the way to go. And what else was there? There was another comment here about leeches. Hiking tip: spray white vinegar on your boots, socks, and pants if you don't like AeroGuard. Lasts longer than AeroGuard 2. Have not heard that, so I'm going to Google this. That could be a good hiking tip. Now, to be honest with you, I had no idea Leech was there for like many hours. It was just a bit of a eek factor when I looked down and went, eek. It was like, eek, what's that? That's all I was. That's all I was. So thank you for those tips. Yeah, but DEET. Another negative thing about hot copper, the problem with hot copper is that people with something of value people with something of value to contribute are swamped and harangued by the uniformed and least perceptive who think investing is like barracking for a footy team. I give that 2 thumbs up as well. Yes, I give that thumbs up as well. And I see that a lot when people are in love with a company, and you get someone coming in saying something a little bit more rational. They've got something to say about the company, and they get picked on. Oh, you suck. You know, stupid things like that. And it's very important if you really like a company to have a bear case. And you can't get that on hot copper, because as soon as you say something bearish, oh, they gang up on you. So I'm not the biggest fan of hot copper. And every time I go there, look for something positive. Sometimes I'll find it, but a lot of times it's just, ugh. Rick Thelin, Apple futures up 10%. Yeah, they didn't finish that way because of the bad day on NASDAQ. Novo Nordisk. No, Novo Nordisk, funny enough, did release. I own Novo Nordisk, by the way. I'm pretty sure their share price dropped heaps the other day. Novo Nor. Wasn't it the other day their share price dropped a lot? Oh, it dropped a lot again. It dropped a lot on 21% on, then 7%, then 5%, then up 2% yesterday. I think this is a complete overreaction for the market. The market is now pricing Novo Nordisk as a company that is not growing at all. And even their update, they did a trading update and it was below expectations. And even their trading update, it's still higher than expectations. And now this company has a P ratio of like 13. Forward-looking P ratio is like 10. Something ridiculous like that. And I think this is a possibility, even though I do own shares. So Novo Nordisk, I haven't had a close look. And the reason I say that, let me have a look. I did get an email about this. I can't remember who sent it to me. And I can't even remember when they sent it to me. It wasn't July 30. Here it is. Yeah, compounding quality. No, update Novo Nordisk. Just lowered this guidance for 2025. I wonder if I can actually... I'm not going to... See if this works. See if this works. No, it didn't work. Oh, here we go. Here we go. Yeah, you notice I haven't read a lot of emails, but I'm getting a bit slack with that. Here it is. So Novo Nordisk lowers its guidance. Stock is down 22% as a result. But in this particular email, they mentioned that they're still forecasting pretty good growth. So sales growth is now expected to be 8 to 14% and operating profit growth 10 to 16%. That's pretty good. It's just lower than expectations. And the P ratio of this company is like so low. And that's what they mention here. Talking about Warren Buffett, that sort of thing. A free cash flow yield of 5.4 to 6%, which is silly for a company that is growing. And that's it. Revenue growth, really nice growth in revenue. Valuation update, forward P ratio of 13.9% versus 10-year average of 24.3. Forward B based on 2027 earnings, 10.5. And so I'm now thinking that the market is completely overreacting to this. And this is a possible opportunity. Anyway, that's a Novo Nordisk. So share price was down a few days ago. KM says, when you go to the US for your hike, I'm guessing there won't be any videos from you. How long will you be away? A lot of us regular video viewers will be having withdrawal symptoms at 5 p.m. AEST. Okay, so I'll be away for 2 months. However, I am banking videos, lots and lots of videos. If you don't believe me, I'll show you right now. Videos I've banked. I'll go to visibility, schedule. I have currently banked 44 videos and I'm scheduling them. In fact, now I'm scheduling a few per day. Look, I have a video called Dogs of the ASX, a video on Walmart, a few Q&A questions, high quality stocks, stock analysis of Novo Nordisk, by the way, question and answer about long-term suspensions, video on Bisalloy. I know I haven't done any thumbnails for these. Article reaction videos, 4 small caps watching. I don't know what that was on. I can't remember. I think there was an article reaction video. Estee Lauder. For end, I should also mention the first video you're going to get when I go on my holiday is going to be my top 20 holdings as of start of financial year 26. And then I'm going to do a few Appendix 4C videos, video on PepsiCo, Appendix 4C video, least favorite type of article. So I'm doubling up. Notice I'm doubling up now. Some of these I'm doubling up. So 2 videos on September 5. Anyway, so you are still going to get a lot of content from me, and I'm recording videos every single day to bank. I'm actually going to be very happy when I come back and I don't have to do that. Anyway, Tree says, I know you have a bit of aversion to Australian ethical, but the chart is well worth a look. Yes, it does, if you haven't seen it lately. So yeah, I might have an aversion to Australian ethical funds, but not trading them. I will trade this company. And this chart does look really good. And in fact, I should have bought Australian ethical. It was in a downtrend. It broke out of the downtrend back in September of 2024. So 1 year ago, less than 1 year ago, in fact. That was the time to buy, about $4. And share price has almost doubled since then. And I saw this breakout. And I just went in there. But anyway, so in answering your question, I might be averse to what they do because it's trading ethical, but I'm not averse to trading them. Not at all. Not at all. And that is the last comment of this particular video. So if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.